time will continue to be an important healer of mortgage rate lock. What is mortgage rate lock? Mortgage rate lock is that in 2023, 89% of people who had a mortgage, that mortgage was sub 6%. That means it was below 6%. And at our current rates, let's update ourselves. Today, on average, we're looking at almost a 7% 30-year fixed mortgage rate. So what does that tell us? Well, if people are locked in 2023, they were locked in at sub 6%. Why would they sell their house and get into a mortgage that's more expensive? And we're talking 89% of those people were sub 6%, not 6%, below 6%. So you've got some people in the high twos if they locked in at the best time ever. You've got some people in the low threes, some people in the high threes, some people in the fours, some people in the fives. As the rate is further away, right, like a 3% mortgage, let's do the math. Let's do the math really quick. Okay, so I'm here on my website where I have a mortgage calculator. So $1 million house, 20% down, let's say at a low rate of 2.8%. That's the monthly payment, right? When the rate goes up to 7%, that payment increases by almost $2,000, and that's money that's going not to you, it's going straight to the bank. Now, when you consider another factor, which is that price appreciation since those low rates happened is almost 30-40%, let's see what 2.8% is at $600,000. That payment is $2,800. Now let's say the price of your home goes up to $900,000, right? And the rate goes up to 7%. This is if someone's moving post-COVID. Your payment's pretty much doubling. That's why people are not moving away from their homes. So people who have to move into a new place, let's say, or want to, a married couple that just got married is not going to really be looking at rates. They're like, okay, let's settle down for the most part. You've got people moving to new cities for jobs. You've got people who have to sell because of work, relationships, family, etc. So those are the people that are breaking mortgage lock. This year, for example, instead of it being 89% of people who had a sub 6% mortgage, now it's 84% of people. So that 16% of people, whether they sell their house and move into a mortgage rate of 7%, it doesn't really matter because their rate's already above 6%. So the more people that are leaving those lower mortgage rates, the more the market will start to pick up because you have a percentage of people that are not attached to their home because of the mortgage rate. So if they don't like their house and they want to sell their house, that's amazing. And they can do that because they're not worried about losing a low rate that they're locked into. So as the market continues, we're going to continue to see changes. Slowly, people will move out of necessity, leaving those low rates, and the market should begin to slowly pick up. But this is going to be a long process. I believe it will be a long process. I don't see next year being too big of a difference for realtors and people in the real estate space changing in a positive direction. I think it's still going to be a tough time next year. And I think who knows how many years it will last. It's going to take time to heal these things.